Hello everyone, this is my third video on extreme WD Gann and Fibonacci technical analysis in the market. I want to show you two things today. The first thing will be projections in Apple and how I believe we are very close to a short-term top despite how amazing the iPad is. I actually picked one up over this past weekend. So let's get right into it. This is a monthly chart of Apple stock going back to approximately 1988. Let's look at some retracements. From the double top low that occurred between 1996 and 1997, excuse me, the double bottom low, we had a nice strong rally up. If you see, the high that it was achieved at 202.96 had a perfect 61.8 retracement to the 2008 lows before breaking to new highs. What's amazing about this retracement is once we see this hold and we have a swing up, as can be shown by this little guy right about here, that means that the trend turns back up and we're probably going to go to new highs. Not only do we know that, but we can predict where those new highs will be. From the second double bottom low to that high, to the 61.8 retracement, we see that 277.98 was predicted almost 2 years in advance. That's a $200 move, perfectly predicted by Fibonacci and WD Gann techniques. Now, the current high that was achieved was approximately 272.50. So let's see where that comes from. Going to a weekly chart, we kind of zoom in on our data. Instead of looking at the all-time low, we're now going to be looking at the 2002-2003 bear market low in Apple. Again, we have a rally up to the same high and another projection. This projection is coming in slightly less than the first one, around 274. Still, we're $2 off, and why is that so? Well, when you're looking at a stock on a yearly basis, you have to take the multi-year lows, and each of them together will cluster for a projection of price. So, that being said, we take the 2006 low, again, to the 202.96 high, and bam, get two projections, one of 231 for 100% and the 127.2, which is coming in at exactly 272.56. I'll remove the other projection so you can see a little more clearly, and there you go. This is the reason that I believe buying puts or getting out of Apple, it's finally time to do so. The major projection of 278 is close enough to justify that risk-reward is now in the favor of the downside. From here, you would be basically risking $12 for another 61.8 retracement of this range, which comes in at 152. So that's a 10-to-1 risk-reward trade approximately on paper right now. But who knows what will happen. A break to new highs above 278 turns the trend up again. Now real quick, I want to follow up from my previous video. I was taken on the bear market sell-off on Friday, April 30th, 2010. If we zoom in to an ES chart, we see the following patterns emerge. Okay. Here we go. This was the 1216.50 high, the 1178 low, and then the 1208 high that I discussed in my previous chart. Then we had the swing down. This is a very important swing down. Going to a 5-minute chart, we see that this swing down after the 61.8 retracement was the first swing that was multi-hour in basis that turned the trend down on a break to new lows here. That means that people who know what they're doing, like myself, who decide to swing trade the S&P market for long big term positions, talking 1,000 lot plus orders, would put their stops about a point higher than that high. That high, if I remember, was 1202.50, which was the exact 61.8 indicated by my red line here, and then the red line here, the breakdown. Today, we had kind of an inverse day where we had a nice sell-off in the morning, which I believe was going to lead to new lows based on Friday's sell-off, and also the fact that we had an inside day, which is extremely rare. There's there's about a 90% chance that the market will take out the previous day's high or low, any market for that fact. But we didn't. But what we did do is rally up to 1202. Now 1202.50 was the secondary swing point where stops would go. My stop personally would be at 1203.50, a point above that, that secondary high. And we rallied right up to, lo and behold, another 75.78.6 cluster and the 75% which called the 1208 high that I discussed in my last video. Again, repetitions in price and time. That's what we're looking for. So it's not unusual that it rallied up to the 75% once the trend turned up after another 61.8% retracement. What is unusual is this triple or quadruple top that has occurred. This big red fat bar that I drew from this primary swing point to the three tops that occurred at the end of the day today is extremely significant. W.D. Gann wrote that triple tops are extremely rare, or triple bottoms, but when they do happen, their power is quite incredible in the market. Right now, it's safe to say that unless 1203.50 is taken out, which I believe means we're going to go to new highs on the year, that me, in agreement with Terry Laundrie and his T-theory, we're going to revisit the mid-Bollinger Band channel, mid-50 moving average, which is sitting right around 1141. So I just want to point out how rare and almost beautiful, if you don't mind my lack of market nerdism, a triple top is. As you can see, I was long off the 61.8, 161.8 projection today, and I shorted the first indication of the triple top during the day, and I almost got taken out here, but bam, we have the quadruple top, which I believe is going to foretell a massive sell-off. I hope you enjoyed this video. I'm going to try to do one, if not two videos a week for you guys, and I appreciate any questions. You can contact me via the blog at pmtcm.com. Thank you very much.